to another exciting introduction to trading episode with The Money Journey. Subscribe to my channel, like the video, hit the bell down below to keep tabs on all these awesome videos I keep posting to educate you, my viewers, as we embark upon a journey to make buku money. Alright guys, and of course, the disclaimer, I have to get it out of the way. Remember, I'm not a financial planner, I'm not your banker, I'm not a retirement planner, and I'm not your daddy telling you what to do with your money. You want one of those, pick up the phone and call one of them, because I'm not one of them. Today, we're going to go over trend lines. One step up from support and resistance, very similar concept. Some group it together, and in all honesty, it is right along lines support and resistance. But instead of horizontal, as we went over in the previous video, we're talking diagonal. And we're talking about trend lines that might be going up, a bullish trend, or bearish trends. One that might be going down, that's a bearish trend. And once you can properly understand and grasp these concepts, what trend lines are, you'll know which way you should be taking a trade. If you should keep trading in a particular direction, or if the trend might be reversing, you need to go another direction. So first thing you're going to want to do is find multiple tops or multiple bottoms and run a trend line. And you don't want to find a place that's too steep, and you don't want to hit candles that are too close together, or else it's not really going to be an accurate trend line, and it's most likely going to break very quickly. For example, you could probably match the tops right here. You see that? I match the tops. You know, maybe some trader would think that, hey, I got a trend line here. It's definitely going down. But that's just not going to get you an accurate result and accurate prediction of where the market is going. You can do an upwards trend line, kind of like right here. And what we want to get as many bottoms as possible. That's not too bad. It's not too steep. You see kind of what happened. Where a really good trend line would be is right here, 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 and here. Now that's a pretty good trend line. So now we're going to kind of draw it across. There we go. See, we're hitting those tops right there. Hitting the tops over here. We're hitting the tops right here. We about got a pretty good resistance line for a downwards trend line now. That looks good. And let's see how well this would get you if you were trading it. Maybe just right here. We were thinking of entering the short market. Okay, that might work. I mean, we are definitely going down. But what if we chose right there? I'm going to play these up a little. Whoa! Look at that. We coincided with the trend line. It came up and tried to test again. But if you drew that, you busted out of it way too quickly, buddy. Now we broke the trend line. And that is a good time to get into the trade. Or you can wait till it comes back down and test the line again. Sometimes it'll come back down and test it, but you're not always going to get that retest. Unless you consider this, the retrace. So now that you know how to draw basic trend lines, and we understand the basics behind them, your next question might be, hey, Money Journey, am I going to utilize this knowledge to make some money? Well, there's two basic trading styles that you can utilize with this stuff. trend line breaks and trend line bounces. A trend line break, that's basically any movement moving out of the defined support and resistance zone. That's what you saw whenever it broke that upper trend line, that strong one that came across about 3 or 4 points. And when it broke that, it's a pretty good time to get it. You can get it when it comes back down and retest, but you're not always going to get it. Or you can go off trend line bounces. The trend line bounces is where it comes up and hits it and goes back down. So let's say you got the upper trend line, we're in a downward trend, and you want to short the market and go down. You might even have a wedge drawn, as I did have drawn, to see exactly how far it might potentially go the other way. So when should you enter the trade? I know I touched on a couple scenarios, but in all honesty, this depends upon how risky you want to be. You can take the trade as the first candle closes outside of the breakouts, or you can wait till the support and resistance line we just touched is retested if you want a little bit more of a safety net. If you like this video, please guys, hit the like and subscribe down below. Go to TradingView, practice this newly found knowledge, polish your skills up so you can make some badass money. And I'll be posting more videos along the series, which will help you guys to continue to build on top the basic lessons to help you make some money and get rich. All right, Money Journey out.